And welcome to this special edition of Business Incorporated. I am Bosin Amafaya. I'm sitting in today on the program, and we're live to you from Nigeria's political capital, Abuja. Of course, the big story for Nigeria is the conclusion of the first Monetary Policy Committee of the Central Bank of Nigeria for the first time in 2019. Many of the polled analysts are expecting the Monetary Policy Committee to keep all rates unchanged, of course, as political campaigns for 2019 elections is now in full gear. Within the hour, we'll get to know what the decisions of these members, how many of them are present for the first meeting in the new year, and what those considerations and decisions are. But first, let's take you through some of the markets as we track them for you each and every day here on Business Incorporated. Let's start with the African markets, where the Nigerian stock market is managing to claw back a bit of the losses it suffered on Monday, the first trading day of the week. As we speak, the Nigerian Stock Exchange General Index is gaining about 0.5%. If you look through your screen, you're looking at the JSE, the South African market, down about 0.27%, and the Egyptian market intraday, about lunchtime Nigerian time, down about a little over 0.5% at 13,502 reading. The Kenyan Stock Exchange finished Monday with about 0.25%, 0.25% in positive territory. But of course, a move on to the Middle East, where we're looking at the GCC markets, those four markets. The Abu Dhabi market was coming in at about a lackluster 0.01% intraday Tuesday. We're looking at the Dubai financial markets lower by 0.02%, and of course the Qatar market down 0.33%. The Tadawul, which is the Saudi stock market, about 0.10%, about 0.1% in negative territory. Let's cross to Asia, where the markets are sort of finished for today. It's about dinner time as we speak in Tokyo. So we started looking at the market decline Tuesday. Investor sentiments were still being ruffled by the global geopolitical issues. And that is the main story. Of course, the International Monetary Fund scaled back the World Economic Growth forecast on Monday. And today, the World Economic Forum is starting off in Davos till the weekend. In Greater China region, the Shanghai Composite declined about 1.18%, and the Shenzhen Composite down 1.435%. In Hong Kong, the Hang Seng Index slipped almost 1% in the final hour of trading on Tuesday. I'll move on to Japan, where the Nikkei 225, which is on the biggest basket of stocks, fell 0.27%, and the Topix Index declined 0.63%. In South Korea, the Kospi was lower by 0.32% to finish off for Tuesday, despite the country's economic growth for the fourth quarter of 2018 coming in above expectations. Markets will price in some of these in the days ahead, the rest of the week. Australia's ASX 200 declined about 0.5% to close 58.8, and the sectors responsible for this were a little bit mixed. Wall Street is where we're touching in now, where it's still early hours. We're just about an hour and a half into Wall Street. So the stocks futures were pointing to a rocky start to Tuesday. The Dow Jones average futures declined 162 points. The S&P 500 and the NASDAQ futures also pointed to some declines. If those implied declines continue to pull through to the opening bell, then you'll see a change of pace for American market. The Dow notched its first 4 weeks winning streak since August last Friday. U.S. markets were closed yesterday for the Martin Luther King Jr. Public holiday. So we're down to Nigeria, where the two-day meeting of the Central Bank's Monetary Policy Committee is being concluded, and those announcements or communique reading by the Central Bank Governor, Godwin Emefiele, will be taking place within the hour. So we're expecting, we're joining that live here, of course, from the Central Bank headquarters as always. This is the first meeting in the new year for the Central Bank of Nigeria that's looking into general elections and handing over to a new administration by May the 29th. So it's been a very interesting time for the monetary policy and, of course, to handle things until the fiscal authorities are fully in place by the second half of the year, as it were. So this is a very interesting conversation, and we have, as always, a team of economists here at our studios in Abuja to discuss this, as well as give us some perspectives from where we're coming from. If you remember, Nigeria has kept its monetary policy rate unchanged 14 times at 14%. A very interesting figure, isn't it? Welcome to the program. Paul Alaje, who is a senior economist and a development economist at SPA Professionals, is live here in the studio with us. Thank you for coming on the program, Paul. We appreciate your coming. Dr. Ogo Okiti is sitting next to him. He's an economist, and the CEO at Time Economics is also here in Abuja as well with us. Thank you, Dr. Okiti. And of course, the professor of capital markets from Nasarawa State University, Professor Uche Uwaleke. Thank you very much. We appreciate your time, gentlemen, for coming in here first time in 2019. So we say thank you very much, and we appreciate your presence, everyone. So, but let's start this conversation from the global, what you call externalities that will be a major issue for the central bank MPC members to consider. So let's start from our side. They'll begin to bring it all back in about how important do you think this messy, chaotic Brexit, on one hand, the trade wars between China and in the US, and again, the slowdown in the European economic growth and things like that would all play a major role in the new year 2019 that we have with us. Paul, let's start with you.
Yeah, just as you mentioned, there are negative externalities that we have impact on Nigerian market. First, the uncertainty within the local system, talking about elections. This is not new to us. We all know that pre-election year, you have some level of growth, and the main election year, before handover, there's some skepticism regarding who will win election or not. So we have that on the side. We also have economic quagmire. Projections for Nigeria was released just yesterday from 2.3 to 2%, saying that the IMF might not be as hopeful as it was on Nigeria October last year compared to the new projection for 2019 growth. In fact, global growth rate was also estimated to be lower than what it was estimated for by the same organization. So there are genuine concerns from China-American trade relation, trade war, to British, Brexit, Europe, economic issues. So all of these, I think, beyond Nigeria, even Africa seems not to be prepared. When you look at the Egyptian economy, looking at South African economy, looking at the Kenyan economy and Nigerian economy, of course, things might not be. Few of these countries seems to be managing the economy as it were. But with the 2% projection for Nigeria and just about less than 2% as we speak, according to the last figures released by Nigeria Bureau of Statistics, things might not be as we expect, as we've expected. Because if you look at the budget President Buhari submitted, it was projected that it would be more than 3%.
I think we'll come to a bit of this postulations. But again, thank you, Paul. Dr. Okiti, it looks like almost on twice every week or every month, the World Bank, IMF is reviewing the global growth and for regions. What does that tell you about the state of the global economy, really? We had one yesterday, and I think about 3 weeks ago, there was another review, and I think a month before that, we had another review. So it looks like even the World Bank and the IMF are worried about how the world economy is pulling from left, right, and center.
Yeah, I think there are three issues from the global perspective that we need to take into consideration. I think coming from the global economic crisis of 2008-2009, in which we saw an unprecedented weak economy, much monetary policy climate. As soon as we came to the end of that, we started seeing some global trade tensions, especially between the United States and China. So the first thing is those tensions. What does that mean for Nigeria? That's the first thing. I think the second aspect that we also need to take into consideration is that following the strong economic growth also in the United States, we started seeing the tightening of financial conditions in the U.S., and these have some implications for emerging markets such as Nigeria. And the third aspect is the issues of what is happening in Europe, the Brexit. And so when you put all these three together, you have a climate of uncertainty. And with that climate of uncertainty, you're having to review growth because of the impact of these combined tensions on economic growth, even in those economies itself. For instance, China has just experienced the slowest growth since 1990. I mean, that is not a good news. So when you combine all these, where does Nigeria come in here? The key channel for Nigeria there is the terms of trade, which is through oil prices. So it is no wonder that for this year, and of course, coming from 2018, we do not expect a very, very strong oil price this year. So those are the things from the international perspective that are playing out in Nigeria at the moment.
Professor Owaleke, if you look at the global markets, how do you think central bankers around the world, head of stock securities exchanges and all of you, and investors will begin to look at, hold on a second, how do we navigate this very messy global geopolitics, look for peace, the whole about nationalism, the whole issue about migration and things like that, and try to find some level of comfort to trade whatever asset class, to trade whatever market between the developed, the emerging, and the frontier markets?
Yeah, thank you very much. First and